So last class we had a complete overview of what Indian financial system and markets and institution is talking about or focusing on. So today we'll be starting with our first unit called as the basics of financial system. Let's look at the meaning today. So what is the meaning of financial system? It is a set of institutions, markets or instruments that promotes savings by channelizing them to the most efficient use. I repeat, it is an instrument that promotes savings by channelizing them to the most efficient use. It is the key weapon in monitoring the economic progress of any country. Okay, now this is the meaning that you need to memorize about what is an Indian financial system or financial system in general. Okay, let's try to understand what it is exactly talking about. Now, all of us have bank accounts. Yes or no? All of us have bank accounts. If you're under 18 or above 18, etc., whatever it is, every individual, being student, a salaried person, or an old age, etc., every individual has a bank account. Now where is this money going? If you're putting into savings account, or if you're opening a recurring deposit or a fixed deposit account, and you keep that money in that account for a couple number of years, a year or 5 years, etc., the question is, where is this money heading towards? Okay, now let's say individually you have kept rupees 5 lakh. Likewise, like you, there are going to be million and millions of people who have opened accounts and opened FD or specifically RD accounts where money is getting accumulated. So that 5 lakh rupees or 1 lakh rupees that you've kept in your account is definitely your savings. Yes or no? Is your savings. Now what is the savings happening with the bank? They channelize them to the most efficient use. Understand that? So all the savings or the amount that the government is collecting in terms of taxes, right, in terms of deposits, etc., all this money is going to the benefit of the economy or for the development of the economy. Is that clear? Now even if you, ma'am, what if I don't have FD account or RD account? I just open an account, I don't keep deposit, I don't withdraw anything. What is it in that case? I would say, if you just say open an account and keep 500 rupees or let's say 1000 rupees as a minimum balance. This minimum balance will differ from bank to bank. Okay, some banks may have just 100 rupees as minimum balance, some banks will have 500, some banks will have 1000 rupees, etc. Let's keep it as 1000 for this example. So you just open the account, you don't really do any further deposits into the account, you just open the account and just leave it. So like you, let's say if there's another 1 lakh people just opening the account, put a minimum balance and then forget about it. Can you imagine if one person is 10,000 rupees is as a minimum balance, likewise into 1 lakh. So 1 lakh people multiplied by 1000 rupees. Can you imagine the volume of money it is mounting up to? All this money now, you didn't deposit, you didn't earn interest, nothing. Just by opening account and just by maintaining a minimum balance, you are able to accumulate a huge amount of capital. Now that banks may use that money to lend as a loan, to lend as an investment avenue, etc. So somebody's savings is turning into somebody's investment avenue. So what is the entire financial system? It might consist of institution, market, assets, instruments, services, etc. What do? They promote savings. They promote savings by channelizing them to the most efficient use, right? It is the key weapon in monitoring the economic progress of any country. Now, if I ask you to talk about the Indian economy, you would always start with how much GDP or the gross domestic product of the entire economy, isn't it? Now, if GDP you have to come as a result, now you need to look into various aspects of the country. How was the software industry working? How was the pharmaceutical industry working? How was the automobile industry working? You are going to talk about various industries. What is the money flow, the inflow as well as the outflow of cash, etc. You're going to talk about various things working to channelize your savings or channelize the funds. Okay, so when I know there is huge amount of money inflow and cash flow, I know that the economy is progressing. Ma'am, what about this lockdown period? Ma'am, the last 5 months, how is the money flow in the country? Definitely, that's the right question. The money flow is very much lower down or decreased compared to the last year, 2019. Right? Starting from this entire lockdown pandemic effect, maybe from March probably, right? Until now, maybe 6 months back, the amount of cash flow is significantly decreased, right? So the progress of the country has actually not stopped, I would say, but it has lowered down, or I would say it is slowed down. Okay, let's say the Nirmala Sitharaman, as I told, as she is the finance minister of our economy, she told 6% or what of the growth rate of Indian economic progress they had mentioned or they had planned to, they are not able to keep it up. Why? Because the flow of funds is not being able to channelize. Is that clear? Did you guys understand what is the meaning of Indian financial system and how does the money flow work? Functions. Let's go to the next topic, functions. Now there are 7 basic functions of Indian financial system. Let's look at the first one. It helps to mobilize the financial resources for the economy. Now let's say you have a huge amount of money with you. Maybe it's hereditary from your grandparents, the wealth is carried on to you. If you're just going to keep that money in your wardrobe and safe and sound, do you think the money is going to grow or the money is going to multiply? Definitely not. If you want the money to grow or multiply, you must learn to mobilize it. Or I would say in a more simpler words in your understanding, you need to invest it. Is that clear? Yes, you are saving money in your wardrobe, but that money even after 5 years, it will remain the same amount of money. The money is not going to increase even by an inch or even by a rupee. Is that clear? So in order for the money to increase or multiply or for you to earn income, you must always mobilize the financial resources. So what does financial system do? It helps you in what? Mobilizing the financial resources of the economy. So what does here I want to make you understand what does the bank do here? Bank accepts deposits and it lends loans. Two major functions of bank are what? Accepts deposits and lends loan. Now once you keep a deposit in the banks are going to accumulate all these deposits and give it out as a loan. Do they just give it out as a loan? No. They also charge a rate of interest in return for loan. So therefore, that profit is how they earn a profit margin or an income margin for banking institutions. Is that clear? So the taxes that we pay, even a small chocolate that you buy or you buy a car, for every good and commodity, you are supposed to pay taxes. Okay, even when you're earning a salary, your income, there is also called as income tax. Okay, you are probably on, right, GST, it's goods and services tax. So all of us are paying taxes. Now what is the government doing about the entire taxes collected? It will use that money to help the economic development grow or help in the growth of economy. Second, it ensures effective allocation of resource to different investment channels. Now, just having money is not enough. Always remember, you need to allocate it. Now, let's say you have 5 lakh rupees of savings at your home. That doesn't mean entire 5 lakh you want to put it in equity shares or entire 5 lakh you want to put it into government bonds. No, you need to effectively allocate to different resources or to different investment channels. Ma'am, where or what are the different investment channels? As I told, you can invest into equity, banks, post office, government bonds or deposits, etc. Okay, All these, or even gold can be a wonderful option. These are all called the various investment channels. So that entire 5 lakh savings that what you have, you can put 1 lakh into gold, 1 lakh into bank, 1 lakh into government bonds, 1 lakh into deposits or loan, etc. Right? You have to effectively allocate of resources to different investment channels. So what does financial system do? It helps you to transfer your amount or invest your savings into different various investment channels. Now what happens by not putting everything into one investment avenue, but you're going to distribute 5 lakh into 5 different avenues? It helps you get multiple income. It helps you get multiple income. Third point, it generates disposable income in the hands of the people, which in turn helps in the exchange of goods and services. Now, what does happen now after, let's say a person is earning 50,000 rupees of salary, okay, then definitely you are taxable under the Indian law. So I'm going to deduct, or your employer is going to deduct tax from your salary or from your income. After that, what? That after paying taxes, whatever salary that remains in your hand is called as what? Disposable income. Can you look at that picture down? I've put it to you. How to calculate disposable personal income. The formula is whatever your total income is, that is your personal income is, minus your personal tax liability. So once you paid taxes on your income or on your salary, the remaining amount is called as what? Disposable income. Now what does that help? It helps in exchange of goods and services. Okay, so with that disposable income, you can purchase or you can afford various goods or various services. Number 4, it plays the role of a transferer of resources from one part of the country to another. It plays the role of a transferer, right? Transferer here means a mediator. The person who's going to collect your money, put it into an investment channel and give you back return. Is that clear? Now for an example, best example is, let's say your bank, any bank, it can be S Bank, SBI, Syndicate, whatever banks they are, they act as transferer. What are they transferring? Money or resources called as financial resources from one part of the country to another. So here you are accumulating money in the form of deposits. Banks or government is going to use that money for some productive usage or for some productive purpose from the economic purpose. Okay, now let's say government is collecting taxes. Is taxes only with respect to South India, North India? Definitely no. Taxes every Indian who is earning income, whether you're earning by a corporate company, a corporate society, individual, a doctor by profession, anybody who is earning income must pay or are liable to pay taxes. Now all this money collected from across India, India is using it for development of the economy. It can be laying of roads. It can be for budgeting of agriculture. It can be for budgeting of medical purposes. Is that clear? It can be, building of hospitals, building of roads, building of bridges. All these are what? Meant for economic development. So, Indian financial system plays a role of transferer of resources. Now, when I say Indian financial system, the system comprises of 4 different units. Okay, it can be institutions, markets, assets, and services. I repeat, assets, markets, institutions, and services. Any order you can call this as, but these are the 4 different areas. We'll be studying that in the further topics. The last 3. Fifth one, it says it accelerates the rate of economic development. Let's imagine for a moment that there are no banks. Okay, that there are no banks. Will the economic development improve or will the economy improve itself? No, definitely it will slow down. I have money, I want to invest. but there is no investment channel itself. How can I invest, or how can it develop the Indian economy? No, everything is stopped over there. Yes or no? So a medium or a transferer or a system there which exists helps us to what? Accelerate. Accelerate means what? Speed up. Okay, accelerate means speed up or increase your speed. Okay, by mobilizing the savings effectively, the Indian economy is going to speed up in what? Rate of economic development. Okay, maybe let's say for an example, even before the entire banking structure was introduced in India, or even banks was established in India, where was our money going? Right? How to invest? Nobody knew. How to multiply our income? None of us knew. Yes or no? So the economic development was very poor. It was maybe even underdeveloped country India was known as, right? But after, when British came into our country, or they made us learn a lot of aspects. The education system in India was even taught by the Britishers. The entire banking industry, how it works, was taught by the Britishers, etc. So then onwards, India started its own banking systems or its own banking institutions. Then money started accumulating in one place, so the economy or the government can use that money for productive purpose. So what it became, from underdeveloped, probably now India is moving towards one of the fastest growing economy, or India is called as what? A developing nation. Why? Because these different systems, institutions, markets, services, assets are accelerating the growth rate of economic development. Number 6, it provides mechanism to control risk and uncertainty. Okay, now you all have private companies, they have public companies, there are also government companies. Yes or no? All of you are aware of this, right? Now, what is this risk and uncertainty? Risk is what? Possibility of loss. Okay, a chance that if I put 100 rupees in this company, there might be chances that I might lose entire 100 rupees. What is uncertainty? Uncertainty is an something that is unforeseen happening. Now nobody planned, or nobody thought there would be a pandemic coming up, or there would be a lockdown coming up, right? It just was unknown to us. That means it is uncertain event happening in the future. So something which we do not know, how can we control? If that's your question, it that is the financial system provides you what? The mechanism to control. It provides you mechanism to control. So government is telling you, if you're going to keep money at your home, definitely robber is going to come and steal it, or you will have a constant tension that you might lose it, or you might waste the amount as well. So therefore, if you invest in Kisan Vikas Patra, or if you invest in post office savings, or even if you are aware of this, one of the scheme which is really interesting, especially for girl child, which is started by the recent government, BJP government. It is called as Sukanya Samriddhi account. I don't know if you're aware of this. This majorly focuses on girl child. Okay, the moment a girl child is born into a family, you can actually open this account and start investing as minimum as 1,000 rupees per year. Okay, you can start investing into this as simple as a recurring deposit, and once the girl reaches 18 years, you can withdraw it. Of course, you'll be getting interest for that investment, or whenever you wish to withdraw, maybe at the age of 25. Now what is the aim of the Sukanya Samriddhi account is, you learn to start saving this amount for the purpose of what? Your girl child's education, or let's say it can be a medical emergency, or for a marriage, etc. So these are the mechanisms provided by the government of India, or by the various institutions and assets, to control risk and uncertainty. Okay, now ma'am, in every investment avenue will there be risk? Yes, every investment avenue there will be risk, and only in government avenues, that is government bond, or government any related to government bonds or government investments, it is riskless. Okay, there'll be risk, it has no risk, or it has very less risk. Is that clear? For an example, if I put into a company called X company, okay, XYZ company, my investment. And what happens is the company turns out to be fraudulent. The company turns out to be fraudulent and the company shuts down overnight. So what happens? My entire investment into that account or into that investment avenue is lost. I am at complete loss. Now let's look at the second example. I invest into government bonds and securities. I ask you a question? Can the government shut down overnight? Can the government run away from us? Definitely not, right? So companies can always is a chance of shutting down overnight or being reported as a fraudulent company, etc. But government, that is not the case. Government has to be there as a consistent means providing or developing or helping the people to have a better standard of living. So government cannot run away, government cannot shut down over the time period or overnight. Parties may change, political parties may change, different people may come into power, but government will remain in power. Ma'am, what if there is flood? What if there is some kind of tsunami, or what if there is a national emergency or war declared? Then, only then, in that extreme emergencies and uncertainties, government may not pay you interest. Government may not be able to return back your money for some time period. Now, when there was tsunami attack, or when there was, let's say, a war declared between India and Pakistan or any other country, then should India focus on fighting the enemy and keeping the citizens safe, or should the country focus on giving you a profitable return? Which is right? Definitely, protecting India's citizens is more important than providing a profitable return. So only on those time periods or those economic or very emergency situations, government has little bit of risk. But otherwise, government is always a secure investment compared to all other private investments. Number 7, it promotes self-employment and improves the employment level. Now, as I told, if you want a specific area to be developed, a particular plot of land, it's a completely out of Bangalore, outskirts of Bangalore, absolutely there's no movement of people, but you want to have employment opportunities over there, or you want to develop that land. How is it possible? A simple solution is start a corporate company or start a factory over there. Now, once a factory is instituted, don't you need labor to work in them? Yes or no? What are you generating there? You are creating employment. Is that clear? You are creating employment. Now, people from inside of Bangalore to travel all the way outskirts of Bangalore for the work, is it possible every day? No. They would want a nearby location to reside. They would want homes close by to their workplace. So automatically your residential places around that plot of land will improve. Automatically all the other let's say parks, hospitals or police stations or malls, etc., automatically will be start developing that particular plot of land. So as years pass by, it will be no more called as the outskirts of Bangalore, but it will be very soon a part of Bangalore. Is that clear? A plain plot of land, started an industry, started a company, today is being a part of the city. So your entire Indian financial system is going to promote employment and improves employment level. So day by day, as your skills are increasing, as I told in your first PPT, if you remember, be prepared with your different investment or different talents or different skills that you want to learn for your better future. Then that skill, that extra skill that you always learn will help you improve your employment level. From the day you started into the company, or let's say you're earning 20,000, would you like to earn the same amount of money even after 5 years? Definitely no, right? As the years pass by, as your experience increases, even your skill set must increase. Even your expertise must increase. Therefore, all this skill set is at the end what? Going to improve your employment level. Is that clear? I hope you have understood what is the meaning of Indian financial system. Remember, it promotes savings by channelizing them to the most efficient use. Functions: it helps to mobilize the financial resources for the economy. It ensures effective allocation of resource to different investment channels. It generates disposable income in the hands of people. It plays the role of transfer of resources from one part of the country to another. It accelerates the rate of economic development. It provides a mechanism to control risk and uncertainty. It promotes self-employment and improves employment level.